get to checking the temperature of the different sectors to see about the leaders that have been moving. We want to start with the semiconductors. The SMH had a down day Friday, but had been really strong. You know, tech is the best sector since June. Do you see any breakdown here if you look at the SMH?
The SMHs, as far as tech, has not really been the strongest sector. Look where the highs are.
I meant tech is a stronger sector.
Yeah, well, tech's been great. You know, mega cap tech, a lot of high beta tech.
Right.
But the SMHs, you know, they had a rally. I'd say that, you know, these semis are okay as long as they continue to hold above this like 33 something area and stay intact. It could go again. The semis are okay. They're just not giving us leadership. They're not giving us the power like we've seen in like Amazon, Apple, Netflix, high beta. But the semis are like the guts and the heartbeat. So as long as they stay intact, it'll be decent for tech.
So what leads, you think? Do you think that the semis can lead tech lower, or do you think that the big guys like Amazon, Netflix can push the semis up?
Well, I think they need to just not be a headwind. They need to just go with the market. They don't have to outperform or lead the market. They just need to be, in check and move higher, so this way the outperformers can continue to go.
All right, let's go to retail. Closed down only 0.6% on Friday after some solid June same-store sales results we saw on Thursday. We're going to talk specific names in just a second, but what level would be interesting to go long in the RTH if you were looking at that?
Let's take a quick look. RTHs, look just to compare the RTHs to the SMHs. Look how close they are to the old highs. So right now they're showing a lot of momentum. I would watch this level here about 111.58. Typically gaps get filled. I would say for this to act really healthy, it's going to have to hold this 110.40 area in order to make another attempt at new highs. Short term, if it doesn't, it might just take longer this year.
All right, let's go to the OIHs. Also held up well on Friday. And in the research reports, like I said, that say they see a better second half of the year, the OIHs would be like the first to benefit from that. What's the chart saying to you?
OIHs are not leading, not lagging. They're kind of in the middle. If you take a look at this chart here, you will see that it gave us a nice trade. Remember, we were talking about when it broke this descending channel here. This is when you had your entry number 1 right around 145. Nice move up to this old resistance. I would say as long as this goes sideways and doesn't get much to below 144 to 145, this will be an area to buy the dip for another move. That should be on your radar.
All right, let's go to the financials, the XLF. We have earnings coming out from JP Morgan and Citigroup this week. Let's look at the chart. How weak are they?
Well, the financials, this is going to be the wild card because the numbers have been taken down so many different times. The question is, have they been taken down enough? And then if they disappoint, can they just blow them off and give these banks a bid, which they haven't had? So if you look at the XLF, they've been really underperforming. But if I would say we could hold this 115 area, and stay above this recent break. I'll show you when I draw my little trusty line here. This was the breaking of that lower pivot. It's got to hold above this 15 to do anything constructive, and obviously those big name reports are going to be important starting, Wednesday? JP Morgan?
We think so. We were having a little disagreement on when exactly JP Morgan comes out. But all right, let's go to the GDX, which is the ETF of large cap gold miners. I wanted to bring this in because they're sort of caught in a tug of war. I saw it on Friday in particular, but weaker underlying equities that we saw, but a stronger gold price. I wanted to see what the chart was telling you about them.
Let's take a quick look. GDX. You know how I feel about these miners, and they haven't been really acting well.
But all the analysts still say these guys are the ones to go, that they are so cheap. Go figure.
Well, it's still below the moving averages. I would say this has to hold above 55 for it to be anything good. And then, maybe if it starts to cross above this mini downtrend, so let's see, it holds higher, goes sideways, and then goes, I might get a little bit more excited. But right now, gold itself is just a lot more reliable than these gold mining stocks.
Right, and we'll talk about gold at the end of the show. So let's go to the IYT. Closing it up here, looked pretty weak on Friday. Do you agree? More downside here?
Well, IYT, the transports, were the first sector to make new highs, which gave us some confidence that the Dow theorists that maybe the market follows. But then you saw on Friday a pretty harsh, gap down. Nothing too extreme. If you look at where we came from this lower end, it broke above this nice descending little channel here. And now I would say as long as the IYTs hold this 99 area or maybe even down to 98, it could continue to be a leading sector. We have to watch this though to make sure it doesn't start to fail.
And as the IYT goes, so does the Dow, right?
Yes.
All right, we will be back with your stock picks for Monday right after this.